What is going on, YouTube? Welcome to the Living Freed channel. My name is Tyler Freed, and in this video I'm going to be talking about long-term investing, taking a long approach when it comes to investing. And that could be into trucking, it could be into being an owner-operator, building a fleet, investing into real estate, the stock market, anything that you put your money into. And why am I talking about this? Well, because I got asked a great question by a subscriber about how do I handle the ups and downs in the stock market. And he specifically asked about the recent stock market drop. The S&P 500 fell about 7%. In about a month it fell. We had a little correction. This was just recently. And since then it's actually pretty much recovered, almost recovered back to its all-time high. But a lot of people get freaked out by the media telling you that, hey, the stock market's crashing, you know, the economy's terrible, everything's ending, yada, yada, yada. And how do you handle that as a long-term investor? It's the same thing, like I said, with trucking. It's the same thing with real estate. If you're a real estate investor, you're going to hear all the time negative news about the real estate market. You're going to hear all the time in trucking about how terrible the industry is, how horrible everything is. And at the end of the day, there's people making money all the time, no matter what. If we're in a boom time, a bust time, a stagnant time, sideways market, whatever, there's people that are going to make money no matter what over the long run, right? Because what do they understand that the majority of people, the majority of investors do not understand? And again, that's in anything that you invest in. Why do I mention trucking? Well, that's because what I do, that is my main business. I am an owner-operator in trucking, and that's where I make the bulk of my money. But my largest investment really isn't even into my truck. My largest investment is I buy low-cost, broad-based index funds, and I have about 75% of my money in a total U.S. stock market index. So that index tracks the performance of all the companies publicly traded in the United States. I own that one, and I also own a total international index, and about 25% of my money is in that. And so that fund tracks all the publicly traded companies that are internationally based. They're not based here in the US. So, and I like to have that diversity outside of just the US. But pretty much I'm buying the whole world stock market at market cap weights. And I've been doing that for the last 5 years. I started off in trucking 5 years ago. And I was a company driver for about 4 years. I drove company and I just stacked my money. I just worked, tried to make as much money as possible with my company job. And I would say 50 to 60% of my income every single paycheck. And I would just put all of that money into low-cost index funds like I'm talking about, and I have not stopped since. And why am I sharing that? I'm sharing that for context for those of you that are new. I've been talking about investing since I started this channel a few years ago. I've been talking about it, and that's because that's what I do. And that is the primary way I'm building wealth. That is the primary. I'm using the income from trucking to build wealth elsewhere. Now, I am investing into trucking, don't get me wrong. And the same rules are really going to apply for trucking. But he asked me, okay, am I going to get to the question? Don't worry, I'm getting to the question. I'm going to answer him. How do I deal with those dips in the market? How do I deal with the down times? How do I deal with that? Well, it's very simple. You have to think long term, right? When you're making an investment, you have to look at, okay, what's the track record of that investment? Number one, if you look at the stock market over the last 40 years, we had multiple wars, multiple recessions, multiple Republican, Democrat in power. We had so many bad things happen. 9/11, great financial crisis, all of these different things have happened. And over the last 40 years, had you invested in the S&P 500, you would have annualized a 12% rate of return, compounded annually 12% rate of return. And why do I believe that is? Well, because when you're investing into a broad, let's say you're buying the S&P 500, which pretty much represents about 80 to 85% of the total US stock market, right? I told you I buy a total US market fund. That buys about 4,000 companies, but it's held at market cap weights. And what market cap weight means is the bigger companies represent a larger percentage of the overall index. And that's why the top 500 companies represent 80 to 85% of the overall US stock market. That's why that is, because the big companies make up a bigger piece of the pie. That's all market cap weighting means, right? And but let's take the S&P 500. When you hear, hey, the S&P did this today, the S&P did that today, that's usually how you can track how well the US stock market is going, because again, it pretty much represents what the US market is doing. It does. And so, yeah, like recently we had this drop. Was about a 7% drop. And sometimes you just don't know why the market's selling off. You'll have different pundits telling you why that is, why that isn't. At the end of the day, short-term trading, short-term fluctuations in the market don't deter me. And again, I'm going to get to why do I think the market has done so well over the last 40 years, and even longer than that, really. It goes back further than that. I think since the inception of the S&P 500, and I can't remember exactly what year that was, but it's averaged about a 10.5% rate of return annualized, compounded annually, 10.5%. I mean, that's outperforming treasuries, that's outperforming most real estate, that's outperforming bonds, gold, silver. It's outperforming all of that. And why is that? Why is that? And why do I not worry about short-term fluctuations when I invest? The reason I don't worry about that is because I look at the track record and I say, hey, yeah, we're going to have some recessions. We're going to have some downtimes. But over the long run, over a 10, 15, 20, 30 year, 40 year span, my entire investment horizon, my entire investment lifetime, right? I'm 30 right now. Whenever I'm 60, when I'm getting ready to not work as hard and start to live off of some of that money that I invested, what is the world going to be like in 30 years? How much innovation are we going to have? How much are these companies that I'm investing in going to grow? Because you're investing in businesses. When you buy an index fund or you buy single stocks or a collection of single stocks, you build your own portfolio, you buy real estate. It's the same thing with real estate. You look at its track record. Most of the time, if you buy in a good location and that property cash flows and you buy in a good location, over time, you're going to make money. As long as you hold on for the long term, you will make money, you will make out well in stocks, in real estate, owning your own business, whatever. But you look back at the US economy and the global economy. I don't just buy US stocks. You can, and you'd probably do very well if you just bought that. But I like to have some diversity outside of that. But if you look at the global economy, let's say, how much do you think we're going to innovate? How much do you think we're going to grow? You have to think long term. You have to think, okay, what will companies like Apple, Google, Facebook, Nvidia, Netflix, all the bank stocks like Bank of America, Wells Fargo, Citigroup, Coca-Cola, Pepsi, and, all of these different these are household names. FedEx, UPS, some of the trucking companies we know. Knight Swift Transportation is a publicly traded company. They're the largest truckload carrier in the nation. These are all companies we know about. And as a whole, now some of them will go bankrupt. Some of them will be non-existent in 5 years, 10 years, 20, 30 years from now. But over the long run, as a whole, what will all of those companies, all of the biggest, brightest, and best companies be worth in the world 20, 30, 40 years from now? If you look at the track record of what the market has done through all these terrible times, all these terrible events over the last 40 years, it's crazy how many bad things have happened, and the market's still annualized 12%. Do I think you're going to get that return going forward, 12%? Probably not. Right? Probably not that high, but who knows? Maybe we will. Maybe AI will revolutionize the entire economy and make those returns even higher over time. I think that's actually possible. I do believe with AI and the development of that technology, companies are just going to be 10 times more efficient and cost effective, and they'll be 10 times more profitable, which will increase their value over time. And if you're not a shareholder of these companies that are doing that, you're missing out. You're missing out on building long-term wealth. Now, how does this tie into trucking? It's the same thing. Yeah, trucking goes through boom and bust cycles. Well, just because we're in a down market right now, just because, things aren't great in the trucking industry, doesn't mean I'm not going to get out there and still run my truck every day, produce as much revenue as possible, keep my costs as low as possible, and maximize the income that I can make right now. I need to still go out there and run my business. And the profit I make from my business, I take that and put it into the index fund. So while I'm working for earned income, I'm also working to put that money into passive investments like owning a low-cost index fund. And I don't worry about short-term fluctuations, like I just said, because I'm taking a long-term approach. Moral of the story, take a long-term approach to investing. Take a long-term approach to everything you do in life, right? If you could drink every day. You could drink every day for a long time and probably not have serious health benefits. I'm not advising that. It's an example, but you could drink and you may not notice serious health effects for a long time, for years, but eventually it's going to catch up to you. Smoking, same thing. The decisions you make today affect you long term, whether you know it or not. And if you're going to be an investor, if you're not going to think long term, if you're not going to give, don't invest in a stock or in especially index. I don't invest in single stocks, to be clear. I'm not saying don't do that. I just personally don't do that. But if I'm going to buy index fund, it's still a risk. It's a risk because it's not a risk as far as in the long run. I don't think it's much of a risk at all, really, in the long run. But if I'm going to dance in and out of the market when stocks sell off or when they go up, try to sell because I think it's the peak, if I'm going to do that, then I shouldn't be an investor. I'm not a true investor. I'm a trader and I'm a speculator. Same thing with trucking. A lot of guys, they parked their truck because the market went down. And, I'm going to get back in when the rates are high. And if you did that, hey, more power to you. You do what you want to do. But you're not truly an investor in trucking. You're not. Because the true investors, the people that make the real money over the long run are in it for the long haul. They are. They're in it for they buy and hold. Warren Buffett, buy the S&P 500 and never sell it. That's what he said. That's his advice to 90% of investors. Buy the S&P 500 and never sell it, and buy it consistently over your working lifetime. Why is he telling people to do that? Because he knows that over time, the U.S. economy, really the global economy, is going to continue to innovate, continue to develop new products and services that benefit mankind. And if you're an owner of all those companies or an owner of some of those companies, you, the shareholder, will benefit over time. The short-term fluctuations are based on trading and, short-term news, and it's based on emotion. But over the long run, stocks or assets, period, get valued based on their fundamental value, period. That's trucking too. Why would I buy a truck if I can't make at least 50% more than I make as a company driver? How is that worth it? If I don't make profit above what I make as a company driver, and a lot of profit, but why invest all this money to buy a truck? People ask, should I be an owner-operator? Well, it depends. Can you pay cash for the truck? Do you have a $30,000 emergency fund? And are you going to buy this truck and run it for at least 3 to 5 years? At least 3 to 5 years. Then it'll be, because it's not going to start paying off for you until about year 3. Because you'll make all your money. Then you're truly profitable. You've made all your money back, and now you're truly killing it. A lot of guys aren't going to do that. They're going to get in when the rates are high, and they're going to get out when the rates drop. It's happened multiple times since I started trucking. I've been watching it for years. So, long story short, now, I'm talking to everybody. I'm not just responding to that guy because it's a good question. How do you deal with the ups and downs of the stock market or trucking or anything? Real estate's the same thing. You invest in assets that produce cash flow and go up in value over time. If I buy a truck, yes, it's going down in value, but it's producing a lot of cash flow that I can take that cash flow and invest in assets that go up in value and pay me dividends over time. That's the key to building wealth. Increase your income as high as possible, get your expenses down as low as possible, and invest the difference in assets. And think long term. Okay, if you want to learn about investing, I always suggest the book, The Simple Path to Wealth by J.L. Collins. Read that book. There's other great stock market books too. I suggest you read the book by J.L. Collins, The Simple Path to Wealth, and you also read any book written by Jack Bogle. Jack Bogle's the founder of Vanguard. He is the founder of the very first index fund. And just look up Jack Bogle, go to like Amazon, Kindle, look up Jack Bogle, and all his books will pop up, like Common Sense Guide to Investing. Read those books before you read anything. If you want to learn about stock market investing, read Jack Bogle or J.L. Collins. That would be my recommendation. Before you put your money into any stock, any index fund, educate yourself. Educate yourself before you do that. And then once you're equipped with the knowledge and you understand it, then think about putting your money into something. Don't ever put your money into something that you don't understand. That's rule number one. Don't ever put your money into something you don't understand. How do I deal? I'm going to end with this. How do I deal with the ups and downs? I understand what I'm investing in. I have a long-term approach, and I don't waver from my plan. Once I set my strategy in place and have my plan in place, I do not change it. I stick with that, and I'm just slow and steady, and I'm thinking long-term, and I'm keeping my eye on the goal. That's what I'm doing. So anyway, I appreciate all of you guys for being here. It's getting pretty hot out here in Nevada. I'm out here in the desert in Nevada, headed into California, but I wanted to do a video today because I hadn't done one in a few days. I hope you guys liked it, and I hope you guys stay tuned for the next one. Peace out, God bless, and thank you for watching.